Good afternoon, live traders. Jeff coming to you a little bit later today. 9/1, new month, September 1st, 2023, next edition of the SPX credit spread play today. A couple different things to talk about today, and I'll start with the SPX play in here. Now, let's take a look at the market overall. Market has been like crazy extended, right? Straight up here. 435 here in the SPY, up to a high of 453. We'll call that. So basically, that's almost 20 bucks. It's about $19 move here. It's not that that's so big, and that is pretty big, but it's 1, 2, 3, 4, 5, 6 days up. Basically, 5 days up. We're near that area, right? Even the 453 area. So that's a huge move, 20 bucks, right? On a SPY, 4.25, 435 or so. That's about 8%, about 5% of a move here very quickly here. So just strong stuff going. I don't know. That's because Apple coming out with the phone or whatever it is, but there's some crazy stuff going in here. Now, market's been kind of out of bounds in here, right? It's been outside of the trend, but boy, that hasn't stopped this thing kind of just moving forward, right through wide range Spark Night Supplier, right to the 50 EMA, right to the 9 EMA, and just going. I just don't understand it. Crazy stuff. Could be partly got a little weekly bicep. I took these trend lines off in here. It is kind of a weekly bicep, a little bit more of an extended pullback. We saw that on the daily chart, and that's continued to hold through. Let's move down to the play today. So this is the play I took today, primarily just waiting for our pitch. And I looked at this here, so you know what, this could be a place to throw a put. I looked back on a 15-minute chart, and I looked at this area, and I'm like, where's the man here? And go in here, you can see that's the bottom. See where it took out that bottom by about 60-70 cents or so, right? I kept looking back to here and said that would be the next place maybe that I would want to see where that wide range bar got halted and things when prices went above and higher, but it didn't get there. So either A, we're going to wait for that put in there, or we're going to say, you know what, let's go take a look at where maybe go in the standard direction of the market. Now, why? Because I think where it's so extended up in here in the short term, I'm leaning towards the market just being tired, right? I talked about it today in the live trading room, kind of the weekend at Bernie's type trading deal, meaning that they're carrying around this market and it's so exhausted to go higher. You have to think that it takes a heck of a move to push that higher. So that was the other way you could look at the market. So as we came back up in here on the 5-minute chart, you can see how we were above the 9, right? In here, I was playing this off the exhaustion. You can see it more so in the 2-minute chart here. See the tails coming in? Well, I guess the 5 is a better shot of this. There's the tails. See the struggle in here? It was a higher low. Technically was a higher high. Didn't close higher than that pivot, but it was right at the higher high. Came back in, and this would say, well, isn't that a buy setup? Well, pseudo from the last bottom it kind of is, but from the old picture it's not. So I was looking at this from a Fibonacci standpoint. I looked at this time, the retracement, so I'll just kind of kick on so you can kind of see. You don't have to draw these lines. You can just eyeball it. You can see 23.6, where we talked about that. If we struggle at that 23.6, less than that 38.2, this is an area that the market may not bounce, at least in the short term. So we had insurance policy, 3 different tree branch indicators ahead of us. Number one, we were trading below or at the 23%. This is basically just a reflectionary bounce. When you're trading at that area, it's that this is an upward move, right? But it's not long based, right? So if I go back in here and even take it from here, just where the channel started, remember we talked about these big moves here. Don't be too ambitious to go long when they break these steep trend lines, right? Here. You want to see a nice angled trend line like this, right, over time. When it moves down too quick, you don't want that. So naturally, it will bring itself up. So I'm always contemplating, okay, where are we gapping from a Fibonacci standpoint? Again, you don't have to have the lines on here, but I just kind of know that was around the 23 marker. We're struggling at that area. Doesn't mean it can't go here and then go positive. We've seen that, right? But you got to pick your side and go with it. We're definitely not even touching this, but we had 3 insurance policies on the tree branch indicator. Number one, the 50 MA on the 5 was above us. The 200 on the 5 was above us. The VWAP was above us in here, and we're threading the 9 EMA right here. 1 down, 1 up, 1 up, 1 down. 2 down, didn't trade below, so it just went sideways. So we took advantage of the sideways price action. Finally, in the end of the day, it did get to 38.2. So again, I was utilizing these. So if we took the play in here, even though we had a little bit of upward price action in here, 450.80, that's at 450.51. That's not bad. We could handle a move backwards on this and for protection on here, here, and here. And the thought was that if we're seeing struggles come in at this area, at least in the short term, if I can do this long enough, a little bit longer here, I'm going to bring in, theta decay, because we're moving towards the end of the day, and that's a 0 DTE. So it's going to continue to work for us, even if the market goes up later in the day, which is kind of what it did in here. So we got in here, we actually exited the play right down in this area. I guess it was, I don't have the exact exit time in here. A lot of it was just decay in here. Right down in here, we exited at 40 cents. That was throttling through. Saw 30, 45, 50, 45, back to 55, back to 45. I originally had a 30 target on that, just a clean 50-cent move in there. And it was just, I just saw the bids chasing down to here a little bit. Like, I don't want to get caught in the same run back up. So let me just take our profits at 40 cents. So we did that. And ultimately it would have expired worthless in here. Didn't come anywhere near a 45.25 for the strike area. But ultimately, just I think we had the right side of the market in here, and the fact that it didn't bounce. Now, if we were midway up this daily channel, I wouldn't have thought that this market could bounce. But again, because we were so high up, look at this on the daily chart once again, that I didn't think that they're going to keep buying this into a long holiday weekend, be it that, and the continuation move. I thought that they would be struggling to go higher. There'd be a little bit more selling than buying. Even if there was more buying than selling, in the short term, it would probably struggle to go higher. Volume gets light on days like this towards the beginning of a holiday weekend. Most of people in the street have already went off to the Hamptons. So there's juniors are holding the fort down. So they're going to put new big money together on this move higher. It's already extended it. Wouldn't be worth it. Would you do it if you're up 7 days, up 8% in the market, put another $50 million going higher? Well, if you've been on the street for a while, you probably wouldn't do it. They understand what we understand, that there is an exhaustion period here. So I played this more off the exhaustion period, but I also utilized Fibonacci, utilized the structure here on the tree branch indicators that were above me. Whether you do the 2 or the 5, it pretty much just kind of fizzled out, because that's what the market does on holiday weekends. More often than not, fizzled into a win. And that's kind of where we got a win. So it's fairly easy money. Didn't go back against this more than like 85, 90 or so. I actually put a couple strikes out there in case it did go higher. I put a couple strikes out there for us to kind of watch and partake in those protection strikes in there as well. Now, keep in mind, if we're in this trade for, I'll have a calculator on here. We're in for 80 cents, right? So 2.5 of 80 is what? It's $2. It's not 2.40. So $2. Whoops. $2 is our stop area. Do it on here. $2 was our stop, right? So we're in at 80. $2 was the stop area. But if you take the 80, right? You take 0.80 and you add $2 to that, right? What have you got? You got 280. 2.80 divided by 2 is 140. That's why I said you want to be protecting at 140, right? The stop is $2, right? So remember, 3 times that's 240 is the stop. That'd be 240. Cut that in half would be 120 or so. But because we're actually using this little bit of abbreviated stop, that's how I got to the 140 here. So if we would have triggered 140, I would have been in the bull put play at any price. Now, I'm always trying to look at the put prices and determine in the next 30 minutes, if that kept going against us, well, where would that price be? You can't wait on it too much like that. You could set it at 80 and be exact, but honestly, if it's $1.10, I'm going to take it there. As a matter of fact, you'll end up just making more money unless that particular one stopped out, then you would just lose a tad bit more using a higher strike. So don't get too convoluted with that. Just realize you want to look for that higher strike on the protection side. You're taking it, your box to trade in. Now today we weren't even close to doing that. So it was all good, but we just kind of fizzled out as we expected the market to do this. I didn't expect a rip roaring day in here. I had a lot of insurance policies in here, could not bounce and struggling on the 2 and the 5 minute chart at here at the 23.6. That's just a struggle area. Even 38 3 is not an area to be proud of. It's just a move back up to go lower, right? You start getting past this 50, 61%. I've talked about this many times. This is when you start getting past here and closing, go ahead and set your eyes on the next resistance area or the top high of the day, because it's probably going to go there. But we're feathering down in here. So in the thought process was the street's probably not going to get long. Most of the people left for the long weekend, they're just going to fizzle this thing out. They got the junior execs in charge. You're not going to put 50 million bucks. They'll play with $1 million, and they're going to keep this thing at bay. They're going to say, don't let this thing go above here. Don't let it go below here. You keep that stock right in the range here. And again, I'm just paraphrasing, but that's kind of how I see it. It's going to fizzle out, particularly that we're already up 7-8%. Right. So if you think about that time in the middle of the thing, that kind of gave us a little bit more of a bearish type of a bias. So weekend, long weekend, extended move up here over the last few days or so, probably not going to buy into the close on a long weekend. Probably not going to happen. So that was part of the reason for, would we have done a bull put here? Would it have won this bull put over here? Yes. In here, 40, 50, 80. Yeah, that by the time it hit here, probably would have won. Probably would have been okay. It would have come against you a lot. You may have had to protect, but how fast this came against us in here and here. But I think the play was definitely on the bear call side, and that's what we ended up playing. So it worked out nice. We did good on the meta. We got out. I'm calling it, I think I put 6 cents in the meta. Nice run on meta. Last couple of days here, we just basically had the bullish gap and pulled in hard here initially with the market, and then weathered back in here. I think we got on pull back in here. And the last time we had the Lulu, we messed with the wrong guy here. This thing here was just a gap up and just was not playing, was it? Gap up and strong over there. There it is, right? So Lulu, gap up and strong. We're just trying, and I think the mistake I made on this was we're trying to play this more volatility crush on an extended move in here. We got in too late to get the crush, because it was already a little bit later in here. This was the crush, right? We ended up getting in over in here, and it just kept actually right in here. We actually didn't get in. Right in here, it got strong. And I wasn't even looking at this until someone pointed this out. Say it was down here at 38 down here. So that's not going to hit 65. And then it got bullish. But look at the angle of retracement. Bullish, right? Boom. This is what triggered it here. We had a one-time loss. So we did take it out in here at 0.65 as a loss, 120. 130, so it'd be 120, a little less than that, about 60 cents, 50 cents at the loss, what turned out to be. So no big deal. We made that up on Meta. We made it up in SPX here. But in hindsight here, this probably should have fizzled away. But I do want you to see one thing here. See how it got bullish in there? Playing that low would have got you out here on a stop. But notice the angle of retracement, right? Look at the bullishness in here. Tails coming in. Even if it doesn't materialize, sometimes it keeps failing. But you have to respect the angle. So I want you to really get focused on the angle. It doesn't have to be on the stocks. You look at the Aspire, the SPX. Look at the angle of retracement in here, right? You have to give that to the bulls, right? They were just so up here. And although they were selling, taking profits, there were more people wanting to buy. And that's what ran this back up. This thing ran from $3.95 in 15 minutes up to $4.02. $7 VIG. Very, very quickly in there. And I think that's what kind of got off behind the trick bag and getting in. We probably should not have got in this on this move in here. Should just cancel the order. Anyway, wasn't too bad here. And it held so far at the top, 405 strike by 410, that the premium won't burn because it's too darn close to the strikes in here, right? It just won't burn. So it's going to stay up elevated because it's not moving down that much. It can stay in there. It's too close to the strikes, so it doesn't know which way it's going to go. So typically what happens in a case like that, it just actually ends up working itself higher premium longer. And we want to kind of stay away from that. So anyway, overall, good day. I will say this. I just got off the call with Maniac here, and on Monday, and he and I, it's a holiday, are doing a training. It's going to be a Zoom call. It will be coming out. All those trainings I talked about are now in process. So Maniac and I are going to be doing a training together on Monday. But I also looked at some things that he's going to be doing. We're going to talk about the Zoom call on Tuesday. You're going to be impressed. Some pretty cool stuff going on that is going to be coming out the week after or two, potentially. And also, you know how the butterfly plays, where we're seeing so many non-plays, we actually have figured out a way when we have a non-play, we're going to be entering the play a different way using straddles on butterflies the next morning. So that means we will have a play every day. Either it's going to happen that day or it doesn't happen that day, and we actually end up entering the straddle butterfly the next day. So that will also be a training coming out, not on Monday. The first training that we're doing is the ORB training. It's going to be very detailed. Manny will show the data. He'll show all the criteria. It's going to be the training for you guys. It's going to be a training for all the new people coming on board. Then we're going to move on into the 1DTE butterflies, and that's going to be coupled with how to use the 1DTE butterflies. And then when we don't have a butterfly, we are going to move into the straddle butterflies. Very simple to do. Just follow the management. We'll have a train on each one of these separately, so they'll all be different links. Won't be confused at all. It's very straightforward, very simple. And if it is, we're going to send you the updates anyway, so until you get used to it. And then we're going to be working on the training using iron flies. And he's got a very unique approach. I was quite impressed. We've traded iron flies in the past. Paul, I know that you've done those in the past pretty well, but he's got a twist on these that I never thought about. Never thought about this twist. Wait till you see the data on this. It's pretty impressive. Matter of fact, just the testing for the last 2 years is where the data goes back. Him and Chatty are actually working on that. And with the last 14 or 16 trading days from August 14th forward, we've out of every day trading that trade, we've only had 2 losses, and they're very minimal at that. So anyway, that's coming out behind. That's a whole new strategy coming out, and that'll be at a particular time. I won't spill the beans on that yet, but it's going to be at a very similar time every day. It's not going to deviate. It's very, very much data driven on that, but there is some proprietary blend in that we'll have as well, just to kind of focus on. But we're going to give you the meat of what we're doing without making it complicated, and how we're trying to use standard deviations. How often does 3 standard deviations hit? Well, 99% of the time you don't go 3 standard deviations. Say 97% of the time you don't move 3 times the expected move. Very rare. So this criteria is based on not moving past that criteria of 3 standard deviations at certain doldrum time. So very interesting approach. You're going to love this, I think, going forward. So that'll come out. I'm testing this with him next week, start Tuesday. The following week, if all goes well, and so far it's already been going well, we're going to move into bringing you guys into the fold on that as well. And that'll be the next week or 2 after. So then we'll have the ORBs, we'll have the butterflies. We don't have that butterfly 1TE. We're going to run a straddle butterfly the next morning. That'll be a training. And then we're also going to be adding, potentially, unless something goes haywire the next week, I don't expect it, looking at a bit of a iron fly version. Here's the cool part. I'll leave you with this little tidbit. For those of you that have traveled, taking iron flies, what's one of the biggest issues with butterflies, iron flies? It's that the long leg goes away. We figured out a way that long leg doesn't go away now. So Paul, if you're listening to this video, you know what I'm talking about, right? But we figured out a way that now we've got a way that long leg will not go away from you. It's possible, but the last 16 trading days, not one day at all has the long leg went away. We're going to show you how to manage it if it does, just in case. But so far, we've got a method on this, I should say. Maynick has got a method on this that we've actually learned how to consolidate that long leg. So we're dealing with just a 4 structure, a 4-leg iron fly with a long leg there. And it's impressive how you can do this. So there's a lot of upside money on this. Today, if you would have played it, would have been 450 winner on one contract. So it has that upside like the butterfly does as well. Anyway, it's coming here in the next week or so. Anyway, I'll leave it at that. You guys have a great Friday. More importantly, have a safe holiday weekend here. If you're in the U.S., if you're out, we're celebrating a holiday in here. So we won't be in the trading arsenal on Monday. We'll be back at it strong and running hard on Tuesday. So you guys have a great weekend. Thanks for your time. And we'll see you then. Take care. Bye-bye.